I'm Charlotte McLeod with the Investing News Network, and here today with me is Chris Blasi, President of Neptune Global Holdings. Thank you so much for being here online with me once again today.
Charlotte, it's great to be on with you again.
Yeah, great to be speaking with you. And we're here because you recently got in touch with me to let me know about a piece of pending legislation that you mentioned has massive implications for the self-directed IRA industry. Thanks for reaching out. I think this is a great topic to be speaking about. I want to start really with the basics here. And so maybe if you could let me know what this piece of legislation is and what's being proposed.
Sure. So obviously this is US-based legislation. And I'm going to talk about it. It's not even this piece of legislation on its own. It's really a pattern that I see happening. And it's going to affect investors in different ways. And I think the self-directed IRA world is important to all of us, especially in the precious metals world, because we know investors who use physical precious metals in their IRAs here in the United States use the self-directed IRA firm. And from most of the self-directed IRA firms I know, the majority of their business isn't the physical metals, it's actually real estate, right? Where clients leverage their IRA money to invest in real estate. They can either buy the building outright, but many of them will enter pools of private placements, right? So there's a management company issues the shares and they participate in that market via the private placement. So it's allowed a lot of these, and I will call them small investors, because, and to put it into context, when I'm talking about a small real estate investor, I'll even include someone who owns a $20 million apartment building, right? They are not, when I mean the big real estate investors, I think, the names that we know and I won't use who've been buying up real estate in the United States aggressively, these big international private equity firms and such. So this is really targeted, this legislation to, in my opinion, to really bring harm to the small to mid-sized investor in the real estate space, which will make things very difficult for the self-directed IRA world. And may have to shift, a lot of these folks may have to shift to other assets within the self-directed IRA. And I'd say probably after real estate, the next is physical precious metals. But to jump into the specifics, so they call this legislation, like it always has this very nice sounding word. It's called the Responsibility Funding Our Priorities Act, right? And it's always sold to the public in the same guise. We're going to make the wealthy pay their fair share, and it's to bring equity. And we all know this never works out that way, right? But the crux of what this legislation is, it's got multiple paragraphs or parts to it, but I just want to read this one section. So it's section 138312. And it basically is going to prohibit IRA investments that are conditioned on the account holder status, such as the account holder having a minimum level of assets or income. What that means is what we call in the United States here, accredited investors. So there's a class of investors that if you have a certain level of assets or income, you'd be called an accredited investor, and you can invest in securities that are kind of exempt, and they basically are in the forms of private placements. This is huge, right? So there are countless individuals participating in the real estate market through IRAs, through private placements. Now, there's other things that private placements are involved in, but by far real estate is the majority of it. And what if this legislation passes? These individuals will have to unwind their position within 2 years. Now, normally legislation of this magnitude says, well, the new rules will start a year or two out. This will be for this tax year. So it's going to go into effect December 31 of this year. They have then 2 years to unwind their position. Now, that's not a lot of time to unwind real estate positions. And if they don't unwind it within 2 years, their account loses its status. So it will no longer be viewed as an IRA. It'll be a regular taxable account and everything that goes with it. So you just think of that. This could force countless, hundreds of thousands of small real estate investors to unwind positions. Oh, isn't it interesting? Simultaneously as these big mega firms have been buying up real estate like crazy, right? With cheap money that a regular investor can't get their hands on. So I look at that as being, it's going to be very detrimental to the self-directed IRA world. It's going to be upend a lot of small-time investors. And when I say this isn't in a vacuum, this is also on top of here in the United States, and I don't know if this happened in Canada, but because of the coronavirus, they basically had an eviction moratorium. So literally millions of renters didn't pay their rent. And of course, that was very detrimental to the small landlords and the small real estate investors. So I mean, if you look at just the intent, they may claim it's not, but the people that put this together aren't stupid. They know what this is going to do. And it is just really, to me, it looks like an ongoing attack on the small to mid-sized investor.
Yeah, and let's talk a little bit more about the motivation there. You mentioned when they put these things forward, it always comes up tied in a nice sounding name.
Yeah.
But so let's hear more about why this may have been coming now and what it means.
So let's look at a few other things that are happening here. And I understand, right, this is happening in the US, but these sorts of actions are happening globally, right? It is, legislation that is being pushed in the EU, in Canada. It's always the same thing, right? It's always more stress, more pressure, more, unnecessary quote unquote accountability on small to mid-sized enterprises, entrepreneurs, and investors. And the large globalists, politically connected elite investors are exempt, right? Even when they get caught doing things, there's never any ramifications. So this to me is the real estate industry, right? I'm in precious metals, but we all know it's the biggest one out there, right? And so many people, real estate is tied to their net worth and their earnings and their income. And this is has the potential to completely upend it. There's also a couple other things. People forget that, and this was brought to my attention by some real estate investors earlier this year. This administration here in the US also wanted to change the rules for something called a 1031 like-kind exchange. Now, what that means here in the United States is if you're a real estate investor and you sell one property, as long as you roll it into the proceeds into another property of equal or greater value, the capital gains tax was deferred, right? So that would obviously keep people in the real estate market, right? Because they want to defer that tax. And when you finally stop and you make the ultimate sale and you're not rolling it into another qualified property, then you pay your tax. Well, they want to change these rules that, well, if the capital gain is of a certain level and it's not that high, it's only $500,000, that's hardly, mega investors. I mean, piece of property for $500,000 gain is nothing. And so if it exceeds that $500,000, they want to take away the provision that's provided by the rules of the 1031 like-kind exchange. And also they want to change the tax rate, making it ordinary income versus long-term capital gains if your income level is $1 million or higher. So, and again, so many people will get sucked into saying, well, I don't make $1 million, so it's no big deal. But this stuff always starts there and it ends up being $200,000. So as the income cap. So, that's why you really don't want this coming to be in any way, shape, or form, because it's never what it's billed to be. And just one other thing, because you're asking about this surveillance and this tightening the screws really on the small time and the small entrepreneur and the small investor. Current legislation here is also, they're proposing that the banks provide detailed information on every bank account to the IRS if that account does $600 or more in transactions a year. I mean, supposedly the banks are pushing back against it, but it just shows you the intent. I mean, that's minuscule. This is just granular to constantly run software to see if they, and who knows how it would be used, the information. I think many people would agree that in the climate we live in, information and agencies like this and legislation like this just gets weaponized against investors. And, that's where I see it, and I would beg for someone to explain to me what they've watched happen since 2008, when the central banks just exist to the benefit of the elites and the big institutions, that this is really helpful legislation. for the small to mid-size investor or the entrepreneur.
Yeah, okay, this is all really interesting. And certainly we can see the connection to real estate there. We can see the concerns for those smaller investors. Could you speak a little bit more about the precious metals side and the impact there? Because I know a lot of our audience has a focus in that arena.
Sure. So someone may be asking, okay, so where does this tie in? What does this mean for precious metals, right? Now, we both know the precious metals have been kind of trading a little down to sideways for some time. There is a lot of negative sentiment, right? I mean, I will beg to differ that if you really step back and look at how the metals have performed since the start of its secular bull market, which began in 2001. But I understand the sentiment because, you know, for those who really, you know, seek, you know, some level of truth and honesty, the metals should be far higher than they are, and the stock market should probably be far lower. But, you know, we're just really dealing in a world of market manipulation and price manipulation, which we know history tells us will come to an end. I know your investors have heard this from countless other analysts or market observers, but it is true. But I share the sentiment, it's painful. But what this to me also shows is it's really another supporting piece of evidence to validate being in the metals, because now with this sort of scrutiny going after the real estate world for the small investor, you know, people would say, well, real estate's a hard asset and it gives me cash flow, you know, so why would I want the metals? Well, the physical metals now I'm not talking about securitized products, right, that are exchange traded, but the physical metals are the only thing that's really sitting outside the system. Since it's not securitized, it doesn't fall under the same rules and regulations, or what I'll say is counterparty risk of anything that is regulated by the SEC, the CFTC, or the exchanges. It is really the last bastion of honest private investment. And, you know, who knows how much longer that will be available. So, but luckily we don't hear legislation that is going after the metals. So regardless, I know people want to see gold shoot to 3,000 and 5,000 until they see that. They're not going to, you know, they don't think it's maybe they should be in that market. It is been suppressed, in all honesty, for so long versus almost every other asset that has been artificially inflated, and that's included real estate for the last 20 years, that when these markets do pivot, right, and they will at some point, right, the metals are the only one that's undervalued. So what you know, and the others are all overvalued. So you know, all I can say is, you know, I honestly believe, because have huge personal positions in the metals, you know, this is our business. They are performing well. They should be far higher. They will be at some point when these markets flip. And I think people are seeing what's happening with Evergrande, and people say, well, don't worry about it. That's just China. No, things are breaking all over. And you know what? If China really experiences a crisis, which it looks like they're heading to, there is no way that the United States is going to be, you know, exempt and will not feel the negative repercussions from that.
Yeah, and maybe we can talk a little bit more about what's going on globally. Like we've been talking about this US legislation, but things are not contained only within one box. These are issues that people should probably be considering across the world.
Yeah, there's so many things happening. I mean, obviously close at home, and that would include Canada, right? Everyone's experiencing tremendous inflation. I mean, I don't understand how anyone even believes a word that comes out of the Fed's mouth. You know, things like transitory, it's all lies. The cost of things are going through the roof, and the supply chain problems. You know, I love when they said this, I think it was Jerome Powell, that the free market will correct the supply chain problems, right? Gee, it's the only time he's ever, you know, thought the free market should do something, because obviously it has nothing to do with, you know, what goes on with the Federal Reserve and interest rates. But no, they're not going to correct it. And well, you know how they will correct it. This is what the free market will do. If there aren't enough products available, the price goes way up. That's the free market, right? So since everything's becoming limited in supply, and I could tell you from a personal anecdote, I have a car it's a newer car, under warranty, has a backup camera that doesn't work, and they can't get backup cameras because the people that manufacture them aren't making them or can't make enough. So, you know, there's another example, and we know semiconductors are curtailing the production of a lot of products. So, I mean, supply chain problems, it's a domino. It's getting worse and worse because components aren't available. And as the amount of available manufactured products go down, the price of those products will go up. Supply and demand, real simple. So, you look at, and then that's us here, China, right, with Evergrande, and most of the wealth of their country is tied up in real estate. If that implodes, right, then a major economy like that can't implode or go into severe crisis without that rippling across the whole world and just exacerbating all the other problems. And we're looking at what's happening in Europe. I mean, they've got energy issues. Their energy costs are going through the roof. So, it's been correct, and everyone's expecting, and the metal should be higher because it is a safe haven when everything falls apart. But the only thing keeping it going is most people want to put their head in the sand and think the Fed is right. It's all transitory. Everything will be fine shortly, but it won't be. And that's why I say that pivot point, I think where the metals take off and so many of these other so-called inflated assets come down, is not far off.
Yeah, and I like that you mentioned what's going on with the Fed there, because it feels like we are hanging on to every word that they say as they, slowly talk more and more about the future plans. But what I hear from people like you when I'm speaking in these conversations is you can't even believe what they're going to say. So I think, psychologically, maybe it's a little bit difficult for investors when they look at things like this.
I understand, but you know what? It takes mental discipline. I mean, I guess it's nice to be comforted and actually think that the Fed is there to give me guidance. You got to come to terms. They are not your friend. They are not here to serve you, the investor, right? It doesn't matter what they say. And I understand that's painful, but you can't be successful in the long run if you're going to trust someone who does not have your best interest at heart. They serve the banks and the major institutions. They do not serve, the small, the middle class, the upper middle class. They do not. And if they did, then it's their policies that are responsible for problems we have today. So it's their policies for the last 20 years, and especially since they helped create the crisis in 2008, and then they just exasperate it after. And the idea that people still think this is being done for their benefit, in reality, the middle class continues to be eviscerated during that time. But people still hang on to the fantasy or the fallacy that the Fed's got their best interest at heart, and it's just not true. So you got to accept it, and you're going to have to listen to everything they say. And in all honesty, I think the way you listen to them is figure everything that comes out of their mouth is a lie, right? Because it is, right? Inflation is not transitory. And that's just a lie that's been compounded on lies for as long as I can remember, going back, especially the financial crisis of 2008, when they told us how everything was contained and there'd be no spillover, and what went on in the real estate market with the ninja mortgages and the CDOs and all the packaging of bogus, non-performing loans or poor, dodgy loans by Wall Street was fine, and it was logical and intelligent, and they would give it AAA ratings. I mean, when are people just going to accept the fact that they're liars? Because they're not stupid. Other people say, oh, they're idiots and they're stupid. That's foolish. They're not. They know exactly what they're doing. So.
Yeah, and so what would be your best advice for people who see this, they want to get outside the system? How do you start getting your exposure to precious metals? I know obviously Neptune Global is known for the PMC ounce, which is a very interesting product. How should somebody get started if they see this coming and they're ready to make their next move?
Sure. So that's another point I want to bring up. There is, unfortunately, now a lot of people come to the conclusion, especially if they're first timers, right? That, okay, I want to get in the metals. Now, there's also a lot of dealers or a lot of practices in our world that I do not agree with. And that has to do with the world of numismatics. Numismatic coins are not bullion investing. And I'm sorry to say that to some people, but it's not. When you buy a numismatic coin, you're paying a massive premium over the value of the underlying metal. Massive, right? And that's a very subjective I mean, excuse me, very objective number. And, I've heard countless times when people go to sell those same numismatics back, that big premium disappears and it's always the same story. Oh, well, the market's weak right now. And, so the point is bullion investing means buying metal, and that includes coins, right? Bullion coins, which are eagles and maple leafs and philharmonics, but without that big premium for so-called rarity aspect of it. Or of course, good delivery bullion bars, right? Or bars from the approved refineries. And that's what we deal in: gold, silver, platinum, palladium, bars, coins. We provide all the necessary services, whether it's delivery or storage, and there's so many scaremongers out there, right? And the big thing and what drives the most numismatic sales are they scare the investors saying, well, the government's going to call in your gold like they did in 1932, right? I've been hearing that for 20 years. In 1932, the US dollar was on a gold standard, right? So when we were in the middle of a depression and they wanted to print money, they needed gold. They don't need gold. They print trillions. I mean, trillions a month, right? No one needs gold. So this whole idea that they need this handful of gold by retail investors, which is all it is, it's a drop in a bucket compared to the amount of, money floating out there, is wrong. But they sell that scare story and people buy it. And, so my point is we will never do that to an investor. Of course, we could sell numismatics if we want, but we don't, because we do not believe in it. It's nice if you enjoy a rare coin for looking at it like a collector, but it's not a substitute for a big position in bullion as as preserving wealth, right? So my point is we are just purely on the bullion side, purely on the physical side, right? We've productized certain things for easy trading, ideal for IRAs, metals and accounts, non-IRA. We have a very robust client portal, so people will have the same experience as if they were with a higher end broker dealer, but we do it all in the metals world, right? Because we know what clients want, we know the services they need, they know the transparency they'd like, the tracking of their portfolio, the pricing of their portfolio in real time. And that's what we provide. So, thank you for asking, and clients could look us up, neptuneglobal.com, and see what we do. And, we do believe that these are frustrating times for the metals investors, but they will prevail over time.
That sounds like a great place to end, but I will open up the floor to you if you have any final words, especially as we're heading into the last 3 months of this year.
Well, thank you, Charlotte. So one thing I think we should look on, October, the end of September, October can always be a very pivotal or a time when markets change in the equity markets here in the United States. It doesn't happen often, but when it does, it tends to happen at this time of the year. Last I looked today, we had a little bit of a rocky day in the US markets. The NASDAQ was down particularly over 2.6%. Both the Dow and S&P were down also, but the favorites, obviously the tech stocks, which are represented more by the NASDAQ, are down more. You're getting more volatility. I think you're seeing a little more pressure to the downside. Gold is down a little bit too. I think what this is also signaling is that there is the true forces behind everything is deflationary. And I'm sure many of your guests have had that debate, whether it's inflation or deflation. And, I know the camp is that if things were allowed to be free market, it's massively deflationary. But of course, the other side is they will continue to print obscene amounts of money in an attempt to inflate things. And they will. That's the path they will go. And eventually they will destroy the purchasing power of the currency, whether it's the dollar or the euro. And of course, what does that mean? That's good for gold. And gold and precious metals are really that store of wealth that thrive when credibility is lost by institutions and governments, right? And I think people are seeing it, right? That these institutions like the Fed, right, compounded on top of many other things, many other policies, whether they're healthcare related, and I think we all know what that means, that it's just, they're by the seat of their pants. No one knows what they're doing. They're so conflicted. There's so many special interest groups that are being protected at the detriment of the masses. that eventually people are going to say, this system is broken beyond repair. And that's going to really be the time that gold and silver and the other precious metals take off.
Okay, well, let's leave it there for now. Thank you so much for coming on today to talk about what's going on in the markets. I think that was a really valuable conversation.
Charlotte, I really appreciate it. It's always great to see you.
Of course. And once again, I'm Charlotte McLeod with the Investing News Network, and this is Chris Blasi with Neptune Global.